This is Nightly Business Report with Bill Griffith and Sue Herrera.
Win streak. Stocks notch their longest string of gains since November as investors start to brush off bad news.
Lifeline, Sears isn't dead yet. The judge gives the company's largest shareholder one more chance to save the storied retailer.
Skyrocketing costs. It's no secret that drug prices are on the rise, but why is it so hard to lower them? Those stories and more tonight on Nightly Business Report for Tuesday, January 8th.
And we do bid you a good evening, everybody, and welcome. 3 straight days of gains. I mean, given the way the stock market has been behaving lately, that's saying something. Trade-sensitive industrial stocks help lift the broader market today on word that U.S. and Chinese negotiators seem to be making some progress. Tech shares were also higher. And by the close, the industrial average rose by 256 points to 23,787. The NASDAQ was up 73. And the S&P added 24. But the rise in the market isn't necessarily because of good news. I mean, yes, there was some, and it helped. But there were also negative headlines out today. And the interesting thing is that the market isn't responding to the bad stuff like it did just a few weeks ago. Bob Pisani starts us off tonight.
So far, the action this week is telling us an awful lot of bad news already been priced into the market. It just keeps coming. Stocks were up both in Europe and the U.S., despite news that was not so great. The big worry now is earnings. Overnight, Samsung said fourth quarter operating profit would drop 29%. That's worse than analysts were expecting. Samsung cited mounting macro uncertainties and lackluster demand in the memory business. Yikes. Now, this suggests that maybe Apple's announcement cutting first quarter guidance last week wasn't just a one-off. Samsung's a really diversified global company. About a third of their revenues come from the U.S. and Latin America, 20% from Europe, 13% from Korea, 15% from China. The good news is the market's anticipated this. Samsung stock's down more than 10% since November and more than 25% since May. Now, take another example. There's more signs of weakness in Europe with German industrial production numbers coming in a weaker print. But just look how the markets are faring. From December 3rd to the bottom on December 24th, the Dow Jones Industrial Average dropped 4,000 points. 4,000. But it's now recovered roughly half of that decline. Bond yields are on the rise. Yields on both the 2-year and the 10-year Treasury notes are slightly higher, and volatility has been steadily falling. A widely watched gauge of fear in the market, the VIX, now plunged almost 50% in 9 days. Those are big moves. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
There are reports tonight that the U.S. and Chinese negotiators have narrowed their differences on trade. According to the Wall Street Journal, progress is being made on issues that include the purchases of U.S. goods and services. Though the two sides are still far from a deal, the talks will continue into tomorrow, and they will reportedly address how China will carry out the pledges it has made.
And from trade to the Fed now, the minutes of the central bank's last meeting will be released tomorrow. And of course, investors, as always, will be looking for clarity about the future path of rate increases. But will they get it? I mean, after all, the market's response to clarifying comments from Fed Chairman Powell last week seemed to sow more confusion than anything else. Steve Leisman has more for us tonight.
Fed Chairman Jerome Powell, in his effort to nudge stock markets back on track, looks to have nearly lost control of the train. Powell last week tried to convince markets that the Fed is aware of the weakness in the economy and sensitive to the downturn in stocks and not hell-bent on raising interest rates.
We're listening carefully to that. We're listening with, sensitively to the message that markets are sending, and we're going to be taking those downside risks into account as we make policy going forward.
The result? Markets may have gone too far the other way. They now expect the Fed's next move will be to cut interest rates. Futures markets price in no Fed action this year, and in mid-2020 actually price in a rate cut. It's a long way off, but it's the opposite direction for a Fed that is still forecasting rate hikes next year.
I think people have gone too far in thinking that the Fed will stay put and then cut rates. And let me explain why. First, it's hard to find any systemic weakness in the U.S. economy. Yes, there may be small pockets, but overall, the economy is doing well, and you saw this from the employment report.
The question now, will the Fed change to reflect the market, or the market change to reflect the Fed? In 2016, the Federal Reserve forecast 4 rate hikes, but delivered only 1. But this change From hikes to cuts would be a far more dramatic about-face for the Fed. Powell's most likely course: let the economic data lead the way. If it's strong, the market could be convinced that rate hikes are warranted. But if it's weak, he'll have work to do to get the train back on the track. The Fed is likely a lot further away from cutting rates than the markets seem to believe. For Nightly Business Report, I'm Steve Leisman.
The number of job openings fell in November, but even with that drop, there are still about 800,000 more openings than workers. According to the Labor Department, the total number stood just shy of 6.9 million. This survey is closely watched by the Federal Reserve for an indication of tightness in the labor market.
The partial government shutdown has now become the second longest in history, and still little progress is being made in negotiations between the president and congressional Democrats. In fact, tonight the president delivers his first primetime address from the Oval Office, focusing on the key sticking point, the border wall. Yolande Mouy reports from Washington.
President Trump will deliver his speech tonight from the Oval Office, drawing on the full power of the presidency as he makes his case for a border wall directly to the American public. In a statement, Trump called the border a, quote, open wound and outlined the administration's requests, including $5.7 billion for a steel barrier stretching for 234 miles, $211 million to hire more Border Patrol agents, $571 million for more immigration enforcement officers, and $800 million for detention facilities and transport.
A lot of this will strike the public as brand new information. I'm not going to get ahead of his speech. I've seen drafts of it, and this is up to him. It will be in his voice, in his word.
Democrats say not so fast. They're trying to drum up public support for ending the shutdown by highlighting TSA workers who are on the job but not getting paid.
They're federal workers who do so much for this nation in so many places, who believe in this country, who are hurting right now.
They're talking about the impact of food stamps, farmers. The FHA isn't processing loans or mortgage approvals right now. On Capitol Hill, lawmakers from both parties huddled this afternoon to discuss where to go next. Talks between the White House and Democrats have stalled. In the Senate, a faction of moderate Republicans are calling for an end to this shutdown, even if there's no wall. And in the House, there will be additional votes to reopen the government this week as federal workers face their first missed paycheck on Friday. But right now, the ball is in the president's court. For Nightly Business Report, I'm Yolande Mouy in Washington.
Leading the Dow higher today was Boeing. The stock was up more than 3.5%, despite reporting slightly fewer deliveries than expected in 2018. But Boeing also said that the backlog of orders has actually grown. And as Phil LeBeau reports, that's welcome news for shareholders.
For all the concerns on Wall Street that Boeing's commercial airplane business may be flying into a rough patch, 2018 orders and deliveries paint a different picture. While Boeing fell just short of its guidance for deliveries last year, the company still set a record, turning over 806 planes to customers. The increase due in large part to the company's most popular model, the 737. Last year, Boeing raised production of that plane to 52 a month, and it's scheduled to hit 57 a month this year. Even more important for investors, Boeing's order book grew by almost 900 planes last year. And despite concerns the president's trade war with China could hurt business, Boeing still sees strong demand from Chinese airlines. That's important because 1 out of every 4 planes in Boeing's order book is scheduled to go to a Chinese airline. And if those orders drop, so could shares of Boeing. Phil LeBeau, Nightly Business Report, Chicago.
Time to take a look at some of today's upgrades and downgrades. We begin with shares of JP Morgan, which was downgraded to hold from buy at Jefferies, with the analyst citing the possibility that the Fed is finished hiking rates. That in turn could hurt the bank's profitability. Price target now $110, and the stock fell a fraction today to $100.57. MasterCard was downgraded to neutral from buy at Bank of America Merrill Lynch. The analyst says that revenue estimates for the year are just too high. Price target $207. That stock rose along with the broader market today to $192.28.
Also at Bank of America Merrill Lynch, Procter Gamble was added to its US 1 list, which is a roundup of best investment ideas. The analyst cites organic sales growth and improving market share. The price target is $108. The shares rose a fraction to $92.46. Nordstrom was upgraded to equal weight from underweight at Morgan Stanley. The analyst there says the stock price could rise if the retailer's strategic initiatives succeed. The price target is $50. The stock gained more than 1.5% to $49.02.
Many thought that today would be the end of the road for Sears, but after a very dramatic day in court, it turned out that's not the case, at least not yet. Sears' board has agreed to consider a revised bid from the retailer's chairman and largest shareholder during a bankruptcy auction to be conducted next Monday. That is, as long as a $121 million deposit is placed by tomorrow afternoon. Courtney Reagan sorts it out for us tonight.
It's beyond the 11th hour, but Sears gets one more chance at survival. A judge is giving Sears chairman and largest shareholder Eddie Lampert and his hedge fund ESL another chance to keep the retailer alive, less than 3 months after it declared bankruptcy. Though many doubt it will ultimately be enough. Sears and Lampert have a long, complicated history. He was CEO until the bankruptcy filing in October, and he and his hedge fund spent years and likely billions of dollars on a number of complex financial engineering maneuvers to keep the company running. And while Sears has been operating, business hasn't been good. Debt has piled up. Sears and Kmart stores deteriorated over time and weren't remodeled or refreshed. And empty shelves weren't uncommon. Perhaps what's most ironic is Sears' history as a catalog retailer gave it the infrastructure and the expertise to successfully operate in e-commerce. But it wasn't put to good use.
Massive transformation on the back of the catalog, on the back of the internet, to turn this into a company of the future instead of a company of the past.
Sears Holdings hasn't made money in more than 7 years. In 2011, Sears Holdings had more than 4,000 stores, around 700 when it filed for bankruptcy. Lampert's bid aims to keep 425 stores open. In its last full-year report, annual sales were under $17 billion, a far cry from its sales peak of $53 billion. Sears stock hit a high of $144 per share in April 2007. When it got delisted in October, shares were just 37 cents. But for retailers and malls, there are positives that could come from a Sears total liquidation. Retailers like Home Depot and Lowe's have been picking up market share that formerly went to Sears. And mall operators say when new tenants move into a former Sears store, the rents paid are from 4 to 9 times higher. For those with fond memories of Sears and Kmart and for its 50,000 employees, there's still a little bit of hope. For Nightly Business Report, I'm Courtney Reagan in Hackensack, New Jersey.
Also late today, JCPenney gave an update on how it did during the holidays. The retailer said that same-store sales dropped by 3.5%, but it still expects to end the fiscal year with liquidity of more than $2 billion. It also announced plans to reduce inventory and close some stores.
Still ahead, trade war? What trade war? Why Chinese buyers may be extending their reach into the U.S. housing market. Apple's CEO today addressed the negative sentiment around his company, saying innovation at the company is strong. His comments to CNBC's Jim Cramer came almost a week after Apple lowered its first quarter revenue forecast, citing a weakening economy in China.
In terms of the naysayer, I've heard this over and over again, Jim. I've heard it in 2001, I've heard it in 2005 and 7 and 8 and 10 and 12 and 13. You can probably find the same quotes from the same people over and over again. And I'm not defensive on it. This is America, and you can say what you want. But I'm giving you my honest opinion is that there is a culture of innovation in Apple. And that culture of innovation combined with these incredible loyal customers, happy customers, this ecosystem, this virtuous ecosystem, is something that is probably underappreciated.
And that helped lift the stock, which closed about 2% higher.
iPhone sales may be slumping in China, but Chinese consumers do not appear to be souring on another U.S. product. That would be real estate. Diana Olick explains.
At an international real estate show in Shanghai a few weeks ago, Chinese buyers weren't talking politics, just properties.
The Chinese are basically politically agnostic. What I mean by that is even though there's a great tension between U.S. government and Chinese, the Chinese citizen seems to be able to separate the political turmoil with the sound real estate investments. And what did you think of the buyers that came to talk to you?
Olson, who sells real estate in the San Francisco Bay Area, attended the show and said not only are Chinese buyers still active in U.S. housing, the pool is expanding to the middle-class, mortgage-dependent Chinese buyer. In the past, it was mostly wealthy cash buyers. The median price of a home sold to a Chinese buyer dropped last year from just under $530,000 to $439,000. The Chinese are also expanding their sites from California to lower price markets in Texas, Georgia, and Florida.
The Chinese people still see the United States as a safe harbor where they can take their assets and park their money, not only for their money, but also for the future of their children.
Olson has several Chinese clients whose children are already working at U.S. tech companies.
We will get a referral saying the mother is flying out next week, their son or daughter is working at Google or Facebook or LinkedIn, and they now have enough money for a down payment, so they're ready to purchase a condo for them.
Chinese buyers flocked to this open house in Long Island City, New York, just a week after Amazon announced it would open a new headquarters there. Several mortgage companies, especially in California, are now catering specifically to Chinese buyers. The only problem is there aren't a lot of low-priced homes available for sale. So as Chinese buyers enter this space, they may have to worry less about trade wars and more about bidding wars. For Nightly Business Report, I'm Diana Olick in Washington.
Union Pacific has a new hire, and that's where we begin tonight's market focus. The railroad picked a turnaround expert to be its chief operating officer. Jim Venna is expected to oversee the implementation of a system that will make the company more efficient and profitable. That prompted a number of analyst upgrades, and it sent the stock up more than 8.5% to $150.75. Verizon added more subscribers than expected in the fourth quarter, including more than 1 million postpaid phone customers. The largest U.S. wireless carrier cited customer loyalty and said the additions came in a highly competitive wireless market. The shares rose nearly 3% to $58.38.
The CEO of Illumina today issued a weak revenue forecast at the J.P. Morgan Healthcare Conference in San Francisco. The gene test maker now expects annual sales of roughly $3.8 billion, and one analyst said that the problem is the company has no big product surprises. That sent the stock down about 4.5% today to $293.75. Meanwhile, Helen of Troy trimmed its full-year sales outlook. The consumer products maker that owns brands like Braun and Vicks cited a deceleration of growth in China's e-commerce industry, as well as on foreign exchange headwinds. Shares fell nearly 13% today to $115.92.
The cost of prescription drugs has long been a hot-button issue. Today, the Wall Street Journal published an article on how a biotech company is considering tackling the problem of high-cost treatments with patient installment plans. Joining us to talk about that and the complexities surrounding drug prices is Ipsita Smolinski, Managing Director at Capital Street. Nice to have you here, Ipsita. Welcome back.
Thank you.
Let's start with the Wall Street Journal article on basically Bluebird Bio, which is putting forward the idea of expensive treatments being paid for on an installment plan and also kind of an outcome-based pricing. Is that practical in an era where it's been so hard to get drug prices lower?
Drug prices are a very hard nut to crack, and I think that what the Bluebird CEO is outlining is certainly very interesting. The problem with a 5-year payment plan, as I see it, is that the insurance underwriting cycle is 1 year. So what if an individual takes that $2.1 million gene therapy and then in 1 year is gone, is now under a Blue Cross plan or a different insurance plan? Mm-hmm. How exactly then are the costs recouped? I mean, I like that they're thinking outside of the box. Let's do an annuity type model, but I think that probably more work and more creative ideas need to come to the fray.
What about the second part of that, though, that Sue mentioned? I mean, essentially they're saying if the drug doesn't work, we don't get paid. What do you think of that? And do you think other drug makers are likely to try and adopt that?
Absolutely. So the latter part of it is a value-based type arrangement where exactly what you said, if it doesn't work, you don't pay. The Medicare program is trying to do that with some of the CAR T therapies, and I think that's absolutely a step in the right direction. I will also mention that the trade groups, pharma and bio, they really favor a value-based payment system. So I think for these products that are coming down the pike with, 7 figures, something's going to have to be done. Otherwise, it'll bankrupt our system.
Now, this type of idea probably would not apply to more maintenance type medicines because the insurance companies seem to be willing to pay for those. And indeed, with generics, the prices come down. Is that the way you read it as well?
Absolutely. I think the other thing to keep in mind, do you remember a few years ago there was an $86,000 hepatitis C drug called Sovaldi? This was a product that eventually was cut by 40%. So that list price of $86,000 was the number that you saw in the press that was on the front page of all the newspapers. But really the PBMs, which are the pharmacy benefit managers, they cut deals with a couple of the companies to bring the prices down. Now that is a situation where there was competition. And here with these new gene therapies, there aren't necessarily competitors and they're a one shot or one infusion type deal. But I would agree with the premise of your statement.
Very quickly, I want to pursue a little more of that. Is that why it's so hard to bring drug prices down, because of a lack of competition in the traditional sense?
I mean, look, I just came from the JP Morgan conference, and there is really exciting innovation out there. But you really need competition to bring prices down. So for brand new therapies, yes, there's going to be a period of time where the market is going to have to reset, potentially pay those high prices until competitors come to the market.
Right.
The FDA Commissioner, Scott Gottlieb, actually spoke at the conference through a webcast because of the government shutdown. But he said, look, we are approving things as fast as we can because at the FDA, their mandate is safe and effective. They don't have any power over price, but they know that competition will eventually bring down prices.
And on that note, Ipsita Smolinski, thank you so much. Ipsita's with Capital Street. Bill?
And coming up, the tech trends that could change our daily lives.
Coming up, we'll tell you about the rise of self-driving vehicles here at CES. Right now, we are driving down the Las Vegas Strip, and there's no one at the wheel. That's after the break.
South Korea's LG issued a stark profit warning. The electronics company said earnings likely fell 80% in the fourth quarter. LG did not disclose further details of fourth quarter operations. Analysts say results were weighed down by year-end bonuses and marketing expenses for new smartphones. The world's second biggest television set maker will report full results at the end of January.
CES, the Consumer Electronics Show, is the largest consumer technology show in the world. The annual gathering has long been a stage for innovation and breakthrough technologies, providing a window into the future and a peek at those gadgets that could change our daily lives. Julia Borston is there in Las Vegas.
180,000 people are expected to attend the annual Consumer Electronics Show. And this year, the giant screens are higher resolution than ever. 8K, and some are even foldable. But the technology that's really in the spotlight is 5G, the next generation connectivity that's as much as 10 times faster than broadband.
I see a huge quantum leap when going from 4G to 5G, much bigger than 3G to 4G. And of course, my expectation that we're going to see so much more innovation, new pools of innovation coming for different industries, even for consumers, of course. So yes, I assume we're going to see much more new innovation when the new technology is now coming out.
5G capability will power super fast video streaming without any buffering, which is what Audi is demonstrating here, showcasing the potential to offer video entertainment and virtual reality from Disney to backseat passengers in Audi cars. This year at CES, autonomous vehicles have a bigger presence than ever. This is a self-driving vehicle from Mercedes-Benz called the Vision Urbanetic. It can carry up to 12 people. And these kinds of cars are designed to leverage the power of artificial intelligence as well as the potential for the coming rollout of 5G. And it's not just autonomous cars. Check out BMW's riderless motorcycle on display. The bike isn't designed to go on public roads, but rather to gather data on how to make motorcycles safer. And this year, the smaller screens of smart home devices, all voice controlled of course, are an increasingly important battleground as Google and Amazon ramp up their offerings.
Whether it's your Alexa home device or your Facebook portal or your Google Home or whatever Apple's ultimate entry into the game is, I think as you look at that from a brand's perspective, from a marketer's perspective, if you start the purchase cycle with Alexa or Google Home, you get that product, you get that toothpaste or that soap, and it makes it into your medicine cabinet or your refrigerator.
We're hearing about all the places ads could show up, even in your Uber app. But for now, Uber's making a splash here with its futuristic flying car. This air taxi concept, in partnership with Bell Nexus, says it will come to market in the mid-2020s. With CES, the place to get a window into the future. For Nightly Business Report, I'm Julia Borston in Las Vegas.
Here's a look at the final numbers on Wall Street today. The Dow Jones Industrial Average rose 256 points. The Nasdaq was up 73. S&P 500 added 24. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.